Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City, and I'm doing this later in May, and I'm just going to do a few videos here for this month. I'm going to be kind of out of pocket for a little bit of while, and kind of want to keep you updated about what's going on in interest rates as I do every month. Rates have kind of been fluctuating back and forth. There's a lot of things going on. Of course, the debt ceiling is still ongoing in terms of the debate and the discussions about what's happening with that. So confidence in the market, kind of varies. And so we've seen a bit of fluctuation, but the good news is it hasn't fluctuated that much. In fact, actually rates have come down just a little bit, and that's really good news. I think the market is kind of baking in that they're going to get this thing done. And so we're starting to see, especially with inflation down to 4.9% according to the government, seeing a little bit of confidence that the Fed is doing this pause, that they're not going to keep raising interest rates, and they're banking in terms of what's going on. Everything kind of points to the fact that we should see rates maybe going down a little bit lower. Now, we're still recommending people do on investment properties 25% down. The banks, the lenders, they really don't want to give good rates on 20% at this point. So going 25, that extra 5% is really a good idea because, two things. First of all, it gets your rates lower for a little bit extra money. And number two, it kind of protects you against the downside. So there's nothing wrong with starting with extra equity in your property and a lower mortgage amount just to start with the rates higher than they used to be a year ago. Now, the other thing is buying down with points, and here's some good news. In the past, we've kind of seen a limit on how many points can be used to buy down the interest rate, but some of the lenders now have authorized going 4 points. In other words, that's based on the mortgage amount. So let's say you have a $200,000 loan. And it's 4 points to buy it down to 5.625%, which is accurate as of the day that I'm doing this, which is a really good interest rate right now. Well, that's $8,000. Well, the other thing is most of the builders I work with are giving 2 points to you. Now, the good news about that is that those 2 points are based on the purchase price. So in other words, instead of you being out $4,000 for an extra 2 points, you're going to be out less, say $3,000 or less. And remember, you're locking in a 30-year interest rate. So in other words, at a certain point, let's say it's 5 years or 7 years down the road and owning your property, that all the money comes back to you for that money that you put out. So let's say it's 7 years to equalize the extra yield that you're getting to pay those points or that amount of money you did to pay this down. And now we have another 23 years of a lower interest rate. And by the 15th year, you're really making some serious money on this. And understand this, people who invest in Oklahoma with me have kept their properties a long time. I have people in the early 2000s that still own the properties that they bought. So in other words, they're almost to that 30 years. And so they've really benefited this way, and you can benefit also. So rates are looking good. It's good for a long-term hold. We can get rates down now to about 5.625. I hope that goes a little bit lower. So if you're interested in buying an investment property right now in Oklahoma City or Tulsa, we've got some great rates. We have some builders that are going to help you out. So let us know, get a hold of us. We'll give you our current investment folder and let you know what is available.